I get it. Looking at homes for sale is a lot more fun than sitting down with a lender to find out how much you can spend on a home. Unfortunately, the latter is the very first step you should take, and sadly, not doing so is the biggest mortgage mistake home buyers make. Secondary to that is the assumption that once someone is approved for a mortgage, nothing else can go wrong. Loan pre-approval isn't a guarantee. It is conditional on a number of factors, and it can be revoked at any time during the process, including just before closing. Do yourself a favor and stick around to hear how to avoid some of the more common mistakes home buyers make when it comes to getting a loan for a home. Hi, I'm Karen Torres, and I've been a realtor with Ebby Halliday for over 10 years. Welcome to my channel, Move Me to Dallas, where we discuss living in the Dallas Metroplex and the surrounding suburbs. Mistake number one, not checking your credit report. Did you know that nearly 34% of Americans' credit reports contain errors? According to the experts at consumerreports.org, these errors often result in a lower credit score and the denial of credit. Mortgage experts recommend that home buyers check their credit reports before visiting a lender for loan pre-approval. You can get a free copy of your credit reports once a year at annualcreditreport.com. This is the only source that is authorized and recommended by the U.S. government to provide free credit reports with no strings attached. Important tip, dispute any issues on your report before applying for a mortgage. Mistake number two, not being honest on the mortgage application. Prior to the Great Recession, lenders were busily providing what have come to be known as liar loans. These were mortgage loans to people that couldn't afford them and were obtained by means of no document process, meaning that the applicant didn't have to prove his or her income or verify assets. Those days are long gone, and obtaining credit is nowhere near as easy as it once was. Although you may be tempted to stretch the truth on your application to ensure you get the loan, don't give in to the temptation. There is no such thing as a little white lie on a mortgage application. Lenders verify everything on the application. Mistake number three, taking a new job before the close of escrow. One of the first things the lender will look at is your employment history, looking for a minimum of 2 years with your employer or in your current line of work. While switching employers during the loan application process may not derail the loan, it will most likely delay the process while the new employment and salary are verified. Mistake number four, making major purchases on credit during the escrow period. When you finally get an offer accepted on a home, it's normal to think about shopping for furnishings and appliances. Don't do it. Lenders typically pull a borrower's credit history one last time just before closing to ensure that the financial picture hasn't changed. The new debt will raise your debt-to-income ratio, and depending on how close your margins were, you may no longer qualify for the loan. Put the credit cards away and save the shopping for after your home closes. The mortgage process isn't nearly as fun as house hunting, but it's the most important step in the process. So my best advice for you is don't make any major financial or life changes between applying for the loan and the closing date. If you do this, your chances of getting a home loan are greatly improved. If you found this information to be helpful, take a quick moment to like this video, and you may want to stick around and watch this video over here that covers how much you should expect closing costs to be in Texas. I'd love to help you find your Texas nest.